some weird stuff happening with LinkedIn, but hopefully the stream hits and it is okay. All right, it says we're streaming, so that's a win. Check this. Awesome. Welcome, John. Welcome, Vikas. Give us just one moment here. I'm trying to double check that LinkedIn's working. Actually, John, you're really great at this. John, can you see if the LinkedIn stream is live? Because that'd be phenomenal. All right. Thank you. I can actually give you a direct link in the chat. Vikas, I don't know if you're new here. I think you're new. But if you would like to come on stage to ask questions using your microphone, camera's optional, but you're welcome to use it. Please raise your hand or use the text chat to let us know. But you can also just use the text chat to type your questions. And as I'm waiting to get confirmation that LinkedIn is live, if you're watching on YouTube, use the text chat to ask any questions, or you can just share what you're working on, and we'll have Matthew and Irina provide some insights, feedback, advice, all that good stuff. Let's see what... Lonnie, great to have you here too. As I was just saying, if you want to come up on stage and ask questions using your microphone and your camera's optional, just raise your hand or let us know in text chat, or you can post questions in the text chat or share what you're working on. And then I'll see where John went. John is checking the LinkedIn feed for us. For some reason, he just went offline. Sorry, there's not usually this many technical little delays, and I apologize. But there's some weird stuff going on in the internet. All right. Also, okay, John says LinkedIn's good. All right, thank you, John. All right, with that little business out of the way, Matthew, Irina, please introduce yourself.
Well, Matt Thomas here. For one, I want to appreciate or say thank you to Irina, Gary for allowing me to join today. Really happy to be here. I in the process of raising my first Fund One, early stage, looking to invest and support founders, taking a more data-centric approach. And would love to hear what some of the founders here are working on and provide any insight, guidance, or offer any support that I can. So again, I'm really happy to be here.
Yeah, thank you. And some of you may know me already. I'm Irina Kukuyeva, one of the mentors.
Sorry, you on
startups.
mute.
Oh.
Wait, no, I'm hearing you, Irina.
Oh.
Oh, I'm sorry. I couldn't hear you at first. I apologize. I saw your lips
no
moving.
worries.
Forgive me.
No, it's okay.
Oh,
It's
no,
okay.
okay.
Again, there's weird stuff going on in the internet today, so I'm just glad I'm not alone now. So thank you for that. All right, Irina. Yeah, pick it back up.
Yeah, no worries. Hey, I've done that before. You give a talk and then nobody heard it. So yeah, no worries at all. But yeah, so I'm Irina Kukuyeva. I've been mentoring with 805 startups, I think probably since 2020 actually, but I mentored a bunch of other accelerators and I help funds evaluate the AI startups. So very industry agnostic. And just looking forward to everyone's questions. But yeah, thank you, Gary and Matt. Thank you for having me.
Awesome. Yeah, it's great to have you here. Yeah, for those of you that are just tuning in, if you're on Start Motto where we're doing this, again, use the text chat to post questions or let us know you want to come up on stage. You can also raise your hand. You can use your microphone and camera that way. If you're tuning in on LinkedIn, YouTube, please use the text chat. Share what you're working on. Post questions. I'll relay those to Matthew and Irina, and we'll get some awesome answers or feedback, advice, insights. While we wait for some of those questions, let's start with like, the basics, real simple stuff, because a lot of founders are, they're trying to figure out how to connect with investors. And I think one of the biggest things that, we try to talk about but doesn't come up enough is when is the right time for a startup, a founder, founding team to seek out investment from yourselves or other entities that are putting investment capital into projects.
Mm-hmm. Oh, that's a good question. I don't know if Matt, do you want to go first or you want me to?
Yeah, well, I think the short answer is as early as possible in terms of engaging, because if you think about raising venture capital solely as a transactional event, you may in turn get a very transactional type of relationship with a VC, and I feel as if you start to develop and cultivate relationships early, especially as you're looking to finish and or finalize the MVP, or if you have some early customers or some pilots in which you're starting. I think that the highest conviction capital comes from those LPs that really believe in that founder to execute that mission, and get that product to market and ultimately scale it and ensure that that's the right personnel for the business. And again, I think that's at the relationship side of things. Maybe another, I guess, tidbit of, engaging with the venture community without having to necessarily reach out to an investor and say, hey, I'm pitching you because I'm looking to raise X amount of capital, is to, take the approach of, although I'm sure you're doing some things in stealth, but, think about building in public, put some tweets and some LinkedIn posts about some of the, um, uh, I guess milestones that you're hitting, right? And allow some of these VCs to kind of bring them alongside you as you build and create that product, which is I guess, indirect way of engaging the community. But unless you know that you have some, surefire, obviously revenue and traction is the biggest thing in which a lot of VCs are going to probably critique an early stage project on. So if you have MRR or ARR that's kind of going through the roof, then at that point you may be able to start engaging some of the more top tier, tier zero or tier one VCs. But again, I guess to go back to the question, just as early as possible and cultivate that relationship is definitely going to increase the likelihood of those higher conviction checks coming your way.
Mm-hmm, mm-hmm. Oh, and I think we lost. Oh, maybe that's me. Okay. But yeah, no, we'll see. We'll manage the technical difficulties. As I was telling Gary earlier, it's not a technical talk without technical difficulties. So, but yeah, no, I completely agree with that. I would say maybe building on the relationship part. What I see a lot, which I would say not recommend, is you meet somebody who's a potential investor and then just send the deck cold. We didn't ask for the deck. I had a good conversation, and then I either get an ask of, hey, introduce me to every investor or who do you know who you introduce me to, or here's my pitch deck, send it everywhere. And then it's, okay, well, do I even understand what you're working on to craft that email introduction? And so I feel like the goal of the relationship, not to make it transactional, but to bring value and then make it so that I understand what you're doing, so that I can craft that email that's not clickbait, to say like who you are, like why you're the startup that the investor will even click on my email to read about. And then agree with everything else. I would say how to connect. This is something I'm still working on, but my goal is always to bring value, whether that's events. It's fairly straightforward, I would say, to host a community event. Not easy, but for instance, LA Tech Week, obviously Matt touched on great points about LinkedIn and Twitter, sharing what you're working on. I didn't know if Gary, you wanted to add anything around advice on building relationships, or Matt.
Yeah, I mean, like, I like a lot of the foundation of what the two of you have shared, and I think also there's a couple traps that I see a lot of founders fall into. For example, with building in public, right? A lot of them think that they have to be online all the time, like live streaming every single thing they're doing all the time. But Matthew, what you called attention to is really important. Sharing the milestones and just, highlighting the fact that you're working and making progress, whatever progress that may be. And I think another thing that gets lost on some founders is sharing the milestones where they overcome adversity. They made a mistake or they made an assumption that didn't come to fruition. They didn't find validation. They proved that it was wrong. And it's really important to show that you have a methodology and approach to business and product and market and all these aspects of, what it takes to be successful that is calculated and controlled. And I think that's something, the two of you can speak on this more, but it's something that I think really sets a founding team apart from many of the other founders that are typically going fast and breaking things just to go fast and break things. And there is no real sense of methodology or process there. Yeah, feel free to add a little bit more there.
Mm-hmm.
Sorry. I mean, you're absolutely right. I mean, uh, if I'm not sure if a lot of founders heard the story or if it's even, all the way public, but I believe, some of the marquee AI projects such as Jasper AI was a hard pivot by the team. And so in to kind of to what you're saying, Gary, when you're on that journey, learning about your customers and really understanding what it is that's going to move the needle. That may require you to make changes, but if anything, to a VC, that could show just some of these soft skill sets, such as adaptability, resilience, and doing whatever it takes to get things done. And also shows that you're really attuned and having a listening or active listening ear to your customers. And so if you're building something, you're not receiving the reception. I feel as if it's really important for a founder to, build not necessarily just what they want or what they think the customer wants, but what indeed there's a real need for. And that only comes from that feedback loop and through that process of building iterative learning until ultimately you find that product market fit and you feel as if more resources at that point in time is going to help you scale, grow, and create a sustainable business.
Mm-hmm. 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 Yeah, I love that. Yeah, I couldn't agree with that more. I would say two things to add. Then one quote that I heard Brian of you know Expert Dojo say is VC is the kind of lighter fluid to keep the fire alive. It's not the one to start it. I think I butchered his saying, but yeah, I completely agree with that. And I will say for anyone joining, if I may, I actually gave a talk on exactly kind of the framework that Matt just shared about, how do you find, what is resonating with your customers? And it's free online. So for those that are joining, if you search for building and scaling with AI on my website, and then I'll put that in the chat as well. You can have the slides. Unfortunately, no recording yet. But to Matt's point is see what is resonating, because probably the products, especially if you're in the MVP stage, the product that's actually going to be resonating with your customers is going to be something super niche from where you started. And you do want that because then you're solving a very specific customer pain point.
Yeah, absolutely. That's kind of something that a lot of founders struggle with as well, is not being niche enough, not being focused enough. And that's goes back to a key word that Matthew used, which is, of course, my brain just went blank because I'm juggling 4 million things. But this idea of the iterative process. right? It's iterative. It needs to be, or it's best approached as a scientific experiment, a series of experiments where you're testing those hypotheses, your assumptions that you have in your mind that you think may be real, and learning from those experiments, and then doing something based on what you learned, right? And that's going to have your product or your service, your brand, the way you market, who you market to, all these different elements evolve as you continue these different experiments. And ideally, like Irina, you said, you're going to become more and more niched down to serve a very specific person in the market in a very unique way, so they get an enjoyable, beneficial experience that feels like it's designed specifically for them and it resonates with them. And that's so important. And yeah, there's another keyword that you used, transactional. Like, the biggest problem I see with relationships, and the reason why I do this, is because so many people are approaching others as transactions. And it's so hollow and so superficial, and it leaves no room for a meaningful relationship to develop, like you were describing, Matthew, where you reach out to an investor and you're like, here's my pitch deck, give me money. And it's like, no, I'm not interested. And then that's it. It's like, okay, all right, see you later. You know, there's no reason to continue interacting with each other in that way. But when you're reaching out to an investor at the early stage to begin those dialogues, to begin essentially vetting each other to see if you're going to be good partners in business together and you're a good fit, it's typically more beneficial. And you two can speak on this too. Irina, you have many times, but it's much more meaningful, impactful to reach out to investors seeking advice, seeking feedback, seeking, some insight that's relevant to the investor, their background, expertise, and their, if you're able to find it, their investment thesis and other elements like that. And in doing that and having those ongoing discussions where you're treating this investor as a mentor, you're going to be building in public with them, touching on these milestones, sharing how you're, dealing with adversity and overcoming it, and a million other things that are super important to showcase that you're not going to take their money and lose it. You're going to take their money and make very informed decisions with it. Yeah, feel free to add more on that.
Sure. Yeah. And, actually, this was something Gary and I were ad hoc mentoring a startup on Friday. And so I like the idea of building the relationship through seeking advice. My one caveat is to make it really small, actionable, and tailored for me. So what I mean by that is, to the earlier point where somebody will send a pitch deck and say, well, just give me feedback. Well, I'm sure, Matt, I don't know, I imagine you also get requests every day. Like, hey, could you just give me feedback on this? And it is a lot of work. And not that we don't want to be helpful, but what I would love instead is a very tailored, hey, I saw your blog post. I had a question about this. This is what I'm doing in my pitch deck. Can you review slide 3 and see if that aligns with X? Okay, that's really, really super self-contained, and you've done the work, and you know who I am. And that makes it much easier to help, because then hopefully it takes me 5 minutes and then I reply, versus review a pitch deck, give tailored advice takes a lot of volunteer work, and you get a lot of these requests. And I'm not saying we don't want to volunteer. I mentored a lot of accelerators, and that's what I do as a mentor, but it's something that, just because of the volume, you got to be, as long as you can show that you're respect the person's time and their expertise, please feel free to go ahead. But I would say I think personal complaint will be, I'll go to an event, I'll have genuine conversations with people, I'll follow up and say, hey, it was really nice meeting you at this event, and then follow up with, here's my pitch deck. And I'm like, that I'm doubting our whole conversation. I'll leave it here, and I don't know if Matt, you want to add anything? And I think, Matt, you're on mute.
Yeah, you're still on mute. Yeah.
Sorry, I can hear you now.
Okay.
The audio went out a little bit. Say the last part again one more time for me, please.
Irina, what was the last thing you
Oh,
said?
oh, I was just saying if there's anything you wanted to add about, how to build that relationship, maybe seek advice or feedback from you in a way that's not asking you to do a lot of work.
Yeah. So I think, especially early on, if you're starting to build out a product and still defining that product, I think one of the great ways of developing relationships with prospective VCs would be to attend their office hours or events. I mean, most founders nowadays, if you got access, it could be an online community such as this awesome one here that Gary's put together, or in-person events. So join some of those Luma event boards and see what's going on within your ecosystem, and see which VCs are hosting in-person mixers and things, that's where you can at least put a face to a name. And I think, just a simple, hey, hello, my name is, whatever, and a handshake nowadays goes so far of at least kind of breaking that digital barrier, which we've all been kind of, to be quite frank, accustomed to over the past, few years with, the remote environment. And so I think, and also too, there's quite a few, um, communities and VCs that'll host, founder office hours. And I think that, again, anything in which you can advocate and communicate and share your cause without necessarily having to do the whole hard pitch, that for one, and from a, I guess, VC's perspective, demonstrates coachability and willingness to hear feedback. And some founders, I feel as if, are so keen on what they want to accomplish, and I feel as if being vision or mission led is a great and necessary attribute, um, for those VCs that have seen projects similar or seen roadblocks. I mean, things are kind of categorized and clustered in terms of some of these concerns, and or I guess, if you think about the variables or components that would tell a founder or communicates to a founder that this may or may not be a great idea. Some of the issues that these founders run into are probably categorized in, a handful of 3, 4, 5 buckets of, hey, this founder doesn't really want to listen. They're really kind of stubborn. And so I think, if you were to lead with, developing relationships early, um, allowing individuals to some degree, that do see your pitch, poke holes in it, tell me what I'm missing, right? And in viewing every interaction as a learning experience, and to go into it with, hey, I may not walk away with a check, but I'm gonna walk away with some tidbit of information that's gonna fuel and further my cause. I think that's the mindset early on. And again, if you keep showing up in that way, what you ultimately have, if you're applying some of these learnings in which, or advice that others are giving you, you'll end up presenting yourself with a really refined, bulletproof type of project that other VCs can say, okay, hey, they listen, they apply these scenarios, and or maybe even ask questions on like the application of that feedback. But ultimately, if that were to leave you with a well-defined, well, vetted, product to go to market, I mean, that just furthers your cause anyway. So that's the worst case scenario, or worst case experience for you, putting yourself out there early, attending events. Also too, I mean, join some of the, I guess, some of the more technical founders, right? When it comes to like the architecture, it could be the UX UI, right? Make sure in which, every element, even if it comes to the branding and the messaging, the storytelling, right? You might not be thinking about these elements as much when you're head down building. But again, if you were to kind of think about, let me kind of share, and I guess evangelize and advocate for my cause and my project, but I wanted to do so as to where any VC that touches or sees this, essentially feel as if, hey, I've dotted every I, I've crossed every T, because I'm applying and I'm listening to the feedback that I'm getting.
I love that. Yeah.
And I think, sorry, just to add one more thing, I'll put this in the chat. One of my favorite, I guess, journeys to product market fit, and one of my favorite projects that really did a great job of explaining what that process was like, was the Superhuman team. I think they did a really great job at discussing. If you think about an email client, right? Everyone has email, right? But everyone doesn't necessarily need to pay $40 a month for this email service. And so I think that they did a really great job. And this is an oldie but goodie, but obviously just got acquired by Grammarly, and so they were able to do some things really well. But I feel as if this frame of thinking of like measuring product market fit to some degree early on, it's just one little nugget or gem I wanted to share with everyone, in case that they were kind of struggling with the early stages of defining that product and applying some of that feedback into their building processes. And so hope everyone finds this helpful, or maybe even something in which everyone wants to revisit to some degree. And so hopefully that can be helpful.
No, this is
Yeah.
great. I love little links like this, and yeah, I also appreciate, calling attention to some of these elements of, again, a founder journey, a product brand journey, and how it's iterative and how it is so important to be interacting with other people, investors, VCs, but also, the customers who you're trying to serve. But be open to that and listen. It's my background's in photography, and I went to art school, and every week, multiple times a week, we're doing the critique sessions. You go do an assignment, take photos, you come back, and you put it in front of the class, and the class and the teacher tear it apart, put it in a constructive way. And at first, it's really hard because you're like, I put my soul into that. Oh my gosh. I can't. It's so bad hearing all these, this critical feedback. But once you get over that and you start listening and allow yourself to be open to these different, interpretations and thoughts and feelings that you've stirred in people because of something you created, all of a sudden you start realizing how you can improve and how you can be so much better and nail the intent of why you did this thing. And the same sort of methodology applies to a product or a service that you're trying to bring people. And I say this all the time: everything results in an experience. Your job is to create an enjoyable, beneficial experience through your brand, product, service, the company that you've created, right? So these elements of what you're talking about and demonstrating to people are so important. Such good takeaways. We got some actual questions. And those of you on LinkedIn, I apologize. I'm, for whatever reason, having a real hard time loading up the page so I can interact with you via the text chat, but I am seeing your questions come in. So Anushka and Santiago, I appreciate you posting. I'll get those questions asked right now. And Sud, I'll get to you next. So just give me a moment. So I appreciate that. All right, so first up, we've got Anushka asking a simple question that is very complex to answer. I do not have any funds. How do I market my app?
Well, there's quite a few, I guess, free avenues you could go. I mean, again, that could look like posting on LinkedIn and Twitter, right? And like finding some of these spaces or communities to post in. I mean, if you're, once you kind of build and launch, there's quite a few, like, I'm not, I haven't seen too much from like the built-in, your city. They built in Chicago, built in New York, built in LA, but there's quite a few tech publications, once you get to a place that you really want to start marketing and sharing, that idea. But I would, start with some of these online. I mean, I think for one, you've made the one great choice today, which is joining the 805 startups community. And so that is even free marketing in and of itself. And so you think about scaling efforts such as this, of joining other communities, sharing what you're working on. Again, joining those those office hours for founders, or for certain platforms that are looking to highlight founders, could be just some free ways of marketing your platform and your solution. So hopefully that's helpful.
Yeah, this is extremely helpful. For me, also, I would say no. This is a really great question. The other one I would say, so I agree with all of the above, is to go where your customers go. The more specific you are, the easier it is to figure out where they go. And one example, if I may, is for me. Honestly, it took me 5 years to nail down my pitch, which right now says, right, like I help investors with AI diligence. I'm looking for investors to support, and that they need help. Well, 5 years ago, as a data expert, I would just help anyone with their data problem. Well, that sounds super fuzzy, not really helpful. I could pitch to a specific audience. So if I knew somebody, let's say it was something in remote sensing, I could say, oh, I can talk to, hey, I've done XYZ, but it was much harder to figure out, well, who's my target audience? Maybe it's a technical founder that needs help, but really, really narrowing it down. And if it helps, what I also realized, so further niching than just any investor, is I found that judging alongside other investors builds that rapport and makes it much easier to explain what I do. And so then that becomes really, really niche. Like one example that I've seen from other, maybe two different examples of what I mean by that is, usually I'll hear, hey, we help pets with XYZ. Okay, well, there's a wide range of pets. Are you helping, let's say, Chihuahuas that are overweight in the 5 to 10 pound range? Actually, I don't have a Chihuahua, so I don't know like what overweight, but the more specific you can get, the more I can say, this is a customer, this is not a customer. So if whoever I talk to at a meetup, at a startup, friends, and I could just say, they're your prospective customer or they're not, makes it much easier to figure out, where do you actually go? Is it a trade association? Is it a conference? Again, maybe you don't see where anyone's working on things. It is, again, relatively easy to throw an event on Luma, which I completely agree, to look there and just say, hey, we're building, if you're in fintech, we're doing a fintech coffee. Everyone pays for their own coffee. Go to a coffee shop, done. I've seen many of those. The great way to meet people and get buy-in. So hopefully that helps. If not, feel free to and then of course the more that you can, I think the other way to market it could be indirectly, is being able to showcase your expertise, whether that's conferences. Let's say, we don't know what your app is. Let's say you're doing cybersecurity. The more you can talk about that topic, and then, as part of your introduction, you could also say, hey, I'm working on this. But the more that you can showcase your expertise, the more that also goes to, why this team building this thing.
No, yeah, those are great suggestions and examples. And yeah, to build on it a little bit, going backwards, yeah, doing the coffee meetup or happy hour where you're just organizing people to come hang out is something that doesn't cost a lot of money at all. And it's an excuse to reach out to people that you want to connect with and just invite them to come hang out with you in a group. It's like, I've been doing this for a while and we're starting to do happy hours. I've, for a long time, been trying to roll out our VIP lunch that's monthly, and it costs a lot of money and it takes immense effort to do that. But with the help of another mentor, Blake Baxter, he's like, why don't you just start doing happy hours so you can once again start being active in all these cities that you were active in before the pandemic? And I was like, oh shit. Yeah, why am I not doing that? That's easy. I can just do that. I don't have to worry about it. I don't need to pay anything. I don't need to do a whole bunch of production stuff. Just get people to come hang out. That's amazing. That's what I want to do. I'm going to do that. So it's just so simple and easy. And the beauty of it too is, for a little event like that, you don't need a lot of people, because you're just hanging out, enjoying some drinks, enjoying some coffee, whatever it is. You can go get boba, whatever you want to do that's, your vibe. If it's something that fits your brand too, like let's say, you have a product that's a SaaS for boba shops to use to help with their inventory or something, right? Well, that's a no-brainer. Go hang out at different boba shops where you're bringing a crowd to your potential clients, your boba shops that you want to sell your SaaS to, right? So think real strategically and intentionally with what you're doing, and you'll go a lot further. And that's, what you are both talking about in regards to, using free avenues, but being very strategic about it. And the other thing too, like if you're very early on with your product and you are still, again, dealing with a lot of assumptions and trying to build an understanding of who you're serving and how to serve them, but also how to connect with them and have that buy-in where the early adopter is excited to build with you. Like they understand what stage you're at. This is like an alpha beta product. You only are working with the MVP, and their input and their suggestions are going to help make this product into something that's beautiful and wonderful and exciting to use for them. Then that's amazing. And you really want to focus on doing things that don't scale. And that's what that means, right? It's just taking more time and attention to be less efficient with how many people you're reaching, but higher quality engagement, more efficient with the quality of engagement that you're getting from these people. So you're building rapport, you're building a relationship, you're building that brand loyalty, even though you're not really an established brand, right? So yeah, taking the time to be really focused on who you're reaching out to and what kind of interaction you're having with them is going to go a very long way, much further than running AI bots to just spam 500 different VCs or potential clients and, have some bullshit. Ugh, I can't, my inbox is full of this shit. And I just saw someone in one of the communities earlier being like, hey, is it like scuzzy or is it cool if I use, a scraper and then run AI bots to, do all this outreach? Someone that runs AI stuff is like, or like AI bots is like, oh, it's totally cool. And I'm like, no, it's not cool. Like, you're clearly not someone that is subjected to constant flow of shit from AI bots in your inboxes. It's the last thing I want to see. And so this goes to a lot of what you two are talking about as well in regards to that personal outreach and that personal engagement and trying to stand out from the crowd by being a real human being, especially one that's not being transactional, but, demonstrating that, hey, I want to empower you, potential customer, potential investor, potential partner. I want to empower you through your ability to help me learn and grow. I want to listen. I'm coachable. I want to give you power to shape who I am, right? So that's like a rant on that. We can get into that a little bit more, but there's more questions, so we'll jump to that real quick. So Santiago, you have 2 questions. We'll start with the first one. How do you evaluate startups that prioritize equitable value distribution or worker ownership? Santiago, I love to get a little bit more context on this while they start to answer this, but I'm curious, like, is this more like a co-op kind of like arrangement, or like what exactly do you mean by this? But we'll have those wonderful mentors jump in and start answering while we wait. So yeah, the questions in the chat for extra clarity.
Oh, okay. Let me check that really fast. I mean, one that jumps out actually that's equitable distribution. So somebody that's a hobby baker, King Arthur flour or King Arthur brand does the, every flour says that it's part ownership, so I would say there's, B Corps and all the different C Corps. I think my one caveat is, so I would love that. I think it just comes down to your cap table. And we can dive into that because, it just talks about ownership. So it's somebody that, you want to have employees be part owners to align the incentives. Then it becomes, as you raise more funding, you give away ownership for financing. And then if you give away too much, then, your investors become the majority owner, and then they're less likely to invest because then, you'll hear the saying that the founders will have less skin in the game. And I guess we can dive into that a little bit, but I don't know if Matt, is there anything else you wanted to add?
Yeah, I think maybe to piggyback a bit on what you said, but when I think about prioritizing equitable value distribution or worker ownership, to me, that says that I have these advocates or evangelists or these individuals that really believe in my mission, where we're going. They want to be a part of that journey, or this is an incentive for those that feel that way. Um, I think that if you, and the key word you mentioned there is prioritize. If you prioritize that, then um, you're gonna probably be more judged on how well you've already garnered some of that interest and advocacy from those groups. And so, in that sense, I would say that that's and look, I think that that's a great value add in a great mission driven component that demonstrates some alignment to the workers, or creating more opportunities and incentives for a group of individuals. But I'm not necessarily sure that that would be the sole reason that I would invest or look into a company. But I do think if you were to really I guess, intently design some sort of system or a program that really went into your thesis and just really your vision for the company, or for the platform that you're building. It would make a lot of sense, and this kind of comes into the way you kind of package and present it. Meaning, if you are looking to create a platform geared towards botanists and something around that, industry, and you have thousands of people that are into plants and flowers and things like that that are going alongside your mission, and not to mention traction, when it comes to the actual product, I think that could be appealing. So I guess just to kind of be more succinct here, just how you package that alongside your product will probably be um, the way in which I will evaluate it. But the business comes first, always.
Mm-hmm, mm-hmm,
Yeah,
mm-hmm.
I'm curious, like, for the two of you to get a little bit more into the cap table evaluation, and what kind of, I guess, basic methodology is taken when you're looking at the cap table, whether it's for equitable prioritization of, worker ownership, or, other investors that have joined in, friends and family rounds, other things like this. Like, what are some of the red flags that you see, and what are some of the things that really stand out that are, are green flags to go, oh, this looks like they worked with, like, a suitable lawyer to craft this, and they're very, like, intentional, again, in regards to who they brought in and how they brought them in.
Yeah, well, I guess just to jump in here, I would say again, it all depends on the stage, the current of the product, as well as the startup. And when you mentioned, call it a red flag could be you've raised hundreds of thousands of dollars for an equitable solution that you don't necessarily have a product for, nor any traction. I think that that could mean that you're looking to kind of sell the, like, we work company, the we companies type of dream, a bit of, selling the vision without, the product supporting that. A green flag could be, um, very simply, like, say, hey, what do you do in one sentence is we democratize access to this. We are innovating or pioneering within this space, and we are, we've allocated X percent of our equity that we plan on sharing and offering to nonprofits or some sort of underrepresented or marginalized group. But again, this is kind of the thesis and the why we do what we do. A green flag is having that being supported by I guess from a cap table perspective, some early stage, probably angel investors, could be friends and family rounds, maybe a few $100,000, and then having a well-defined product, with that shows that you um, are thinking about operational risks to some degree and not burning through capital just solely on, your living expenses. It would show, hey, we raised this amount and we put that back into the business and to really help us define and and validate our product, I think those could be green flags.
Yeah, no, that sounds great. Yeah, I would say, I think what's interesting is when I do diligence, one that, really depend, like one stands out actually is, so we were doing diligence for a startup, and their cap table had many angel investors. So a lot of small checks. And so the fund that I was supporting has two investors, both were operators, and it was interesting to get their different take, because one of them was, well, this is so many investors, because then what ends up happening is the next time you raise, you're going to have to do a lot more negotiation, especially if there's a down round or if there's other, things you're looking for that, or if you need, depending how you structure things, governing rights, things like that, may become a little messy to manage so many people. And so one was that was just a red flag. It's more than 20 different people. It was a big chunk of ownership. Versus the other investor said, well, I've been a founder also, and sometimes you just take whatever money you can get. So again, like depending on who you get reviewing that cap table, you get a different take. And one, actually, a completely different opinion that I heard last week is, just be mindful who's on, again, easier said than done. This was a lawyer sharing advice. Be mindful who's on that cap table, because not everyone, for the person that gave you $1,000, $1,000 meant so much more than a fund giving you 100,000. And they will ask you for a lot of updates and things like that. And so, their advice was, just make sure you're ready for everyone that's on the cap table to ask you for things. I would say, as everyone says, a green flag is a clean cap table where, it's clear that all the founders own the majority. There's not much, there's not much outside capital yet, I would say, from what I've heard. What will get messy is when you're raising on many safes with many discounts, and you've offered a lot, and then your valuation actually for your price round becomes lower, and then you gave away much more of your company that you've done without doing the math to figure out how much that was. So, I would just say, I think that's one thing that I've only met one founder that did cap table simulations to say, okay, this is what I'm raising and this is the discount. And if the price round becomes a down round, what does that look like? Because it's unfortunately very easy to give away more than 50% of your company just on many safes. Again, easier said than done. And then what ends up happening, if you gave away the majority of your company, then investor will say, either I won't invest, or can people give up some of their equity, so then the founder gets the ownership, the majority, and then navigated those conversations and the legal and all of that becomes way less fun.
No, yeah, those are great. Yeah, both yeah, interesting insights for sure. And I think too, like, both of you touched on some things that others probably have never heard before, and it's stuff that I've been doing this for a long time. A couple things that I haven't heard recently, so I really appreciate that. Santiago has not follow up, but a secondary question, and
Wait,
also,
Gary, not to interrupt. Should we do Sud's question first, then go back? So I just want to make sure everyone gets their question.
yeah, why not? They're kind of
Let's do that.
related. Yeah.
Yeah.
But yeah, real quick.
Okay.
Also, there's a couple of new people joining us on YouTube and LinkedIn. Again, LinkedIn, I can't respond to your text in the chat. Something's going wrong, but I can see them. So if you have questions, please post them. I'll get to them. I'll relay them. And yeah, also everyone that's tuning in, if you don't have a question, feel free to just simply share what you're working on, and we can see if, Matthew, Irina have any sort of thoughts, feedback, insights that they can share, advice, and go from there. But yes, Irina, yeah, let's get to Sud. You can take it from here.
Oh, sure. So I think Sud's question, can everyone see the chat, or maybe I'll just read it. So basically is interested in agentic AI development and wants to go to support manufacturers with their internal documents and customer support. How do you outreach and meet local companies? So This is a really good question. Maybe I'll answer a more general one, which is like, you have an idea, how do you get validation? And I know me and Gary talk a lot about the front door test a lot. So before I even go into that, and then ask Gary to flesh that out for everyone. One thing I would say is, so there's kind of almost like three different parts to it. One is like, how do you validate an idea, but also how do you bring value? And then the other part is the I would say is the cybersecurity part of it, or just kind of the privacy part of it. Because for this one, right, you have an idea, but you're asking a company to give their internal documents that usually always employees sign NDAs around to say, hey, I'm not going to share this with anyone, I'm not going to post it anywhere. And then if you're going to be the other added complexity, I don't want to be doom and gloom, is depending what platform you're going to be using for the agentic part. What that means is if you're using OpenAI, whatever, using their free tier, you're just giving somebody's internal documents to a third party to do with whatever they want. So that's going to be like a major objection, probably just from the top, for everyone. So as I say this, then it becomes, okay, are there certain things you can bring value to them now that you don't need internal data? Are there certain things, I'm imagining the fact that you're going after local manufacturers, you probably have a manufacturing background. So giving your expertise, and I would say, kind of the lived customer experience, what are certain things you know to be true now without looking at their data that you can help with that pain point? And so it's kind of the other term you'll probably hear people say is the, what is it, land and expand. You like land at the beach to say, okay, I'm helping the manufacturers with, let's say, and maybe it's something, or I'm trying to think like what is good that you might not have, that you could have access to, but maybe it's something like, we can help you figure out if the shipping time is in the SLA, service level agreement. So again, just like half made this up, but if you're a manufacturer shipping a product, you're probably paying FedEx, UPS, whatever, to say, hey, we're probably paying at this tier, we need it to be delivered in 3 days. Like, is it actually 3 days, or is it like 5 to 10? Maybe you save them a ton of money and they're like, oh my God, this is amazing. Again, I just like half made this up. So like, take it as you will. But then all you need from them is almost like the tracking information, and then you can get it and see like what the time was, right? So the timeline to value is short. And then as you build a rapport, you've just saved them 6 figures, maybe 7 figures. You're like, hey, great. Also, I can help with this other thing around, you mentioned customer support. Maybe when people are asking, hey, where's our thing? And it's been more than, 3 days, we sent them a notification, hey, it's still in progress. So you're not losing, again, customers. And I'm actually going through, there's a startup right now where they're super early stage, and I pre-ordered something and they said, I pre-ordered April 1st and it was going to be sent out April, May. Well, June 1st, I emailed them like, hey guys, it's been 2 months. Where are you? Wouldn't it have been nice if I just got an automatic email, let's say like mid-April, mid-May, June 1st, hey, we still remember you, again, something super easy. I'll stop talking and I'll let Matt, if you want to add, and then I don't know if Gary, you want to talk about the fake door test.
Actually, I think you really hit that on the head there. So I want to be cognizant of time too. So I appreciate you sharing.
Yeah. Are the two of you okay on time? When's your hard stop?
I can go a few minutes over.
Okay. All right, cool.
Yeah.
All right, yeah. All right, yeah. Yeah, Sud. Yeah, great advice. The only other thing, building on a lot of the other advice that's been shared already, is be part of the local community. Go to different events or opportunities to connect with them, and just approach the companies that you want to do outreach with also as mentors. Share, hey, I'm working on this, I'd love to get your insight. And like Irina shared earlier, be hyper specific, make him simple ask. See if you can buy them coffee, spend 20 minutes, go to them, like wherever is closest coffee shop, their favorite spot, and be like, hey, I'd love to like pick your brain about this very specific thing that is relevant to you. So yeah. Okay, so let's jump real quick to Jose Mendoza asks, building a climate smart farm franchise, but no traction yet due to land and capital. Is VC real, is VC realistic for infra heavy models, or should we seek other funding paths? Jasper, no, sorry, Jasper and Jose, different people. So that's Jose's question. Sorry, it's in the chat.
Well, I'm not necessarily all the way sure, or maybe like there's some clarity in which would be helpful to know before I really answer the question. But um, considering the land component, again, not necessarily sure, don't have a lot of details. So I would say that venture is possible. I mean, depending on you mentioned climate smart, which incorporates to me that that's a buzzword for ESG. So I would, so I guess the short answer is yes, it's realistic. And, for funding paths, I would look at some of the climate ESG venture funds and grants that may be available.
Yeah, I love that. I would say, so to add on that and maybe play devil's advocate, so completely agree with all of that. Maybe if the blocker becomes the land, maybe there's a way to offer consulting services to the farms first to kind of prove it out. And then you're getting revenue. And then you'll see, okay, do you need your own farm, or is there a software product that you sell to the farms? But what Matt said, I would also completely agree.
Yeah, yeah. Adding on to that, absolutely take the lean methodology approach. Like Irina pointed out, do you absolutely need your own land to start this, to prove your core assumptions, to validate those? That's what matters first at this stage, proving that whatever your technology is, it can actually deliver an enjoyable experience with benefits and value to who you intend to sell it to. And Irina gives a great, suggestion. Like, yeah, see if you can partner with existing farms to implement your technology and prove it out that way, and eventually move into getting your own land. Another option that might be possible is, reaching out to the local government at the city and county level and see what land they might have that is just sitting there that they can either it's already zoned for agriculture, or they can rezone it, and they're looking for projects to do that with. But I think that's still like version one versus what the MVP is. Yeah.
Love that.
Okay, now Jasper's questions. Hey, so we're planning to raise around 5 million soon. I'd love to hear from your side what kind of traction, team strength, or metrics could make you feel confident backing a company at that level. I'm building an AI product that helps students actually learn better, not just automate tasks, but improve real outcomes. Curious how you think about that type of product compared to things like enterprise AI, automation focused tools. What stands out for you as investors? Yeah, that's a lot of good context.
Yeah. Yeah. I think my short answer is going to be depending what milestones you're pitching, right? Like and what you're working on, because right now with the fundraising market being tight and everyone for better for worse using coding tools, like why do you need 5 million versus 1? Like that's going to be the question you'll probably get asked. Like what is it using, what will 5 million do, and is this your first round of funding, or is there something else, and what do you actually truthfully need to hit the milestones that you need to do. And the more that you can talk about what those metrics are and how you specifically built your software to answer that end to end, will buy a lot of rapport. And I'll stop here and see if Matt, if you want to add anything.
Yeah. So, well, maybe the short answer is, I'd be curious to know where the $5 million target came from. Because if you tell me that you're looking to raise 5 million, but then you're building a product to do something, I think at 5 million, I would think that you were already in the market, that there's some ARR. I mean, so this is more so like a larger seed round, I'd say, is 5 million. And so if you were generally speaking, I mean, the rule of thumb, I would say, um, even at the pre-seed stage, a lot of firms are doing nowadays. There's some, there's some traction, some revenue coming in. This could be 100 grand, in ARR or so. So if you're looking for 5 million, I would anticipate that the product's already built, you're already in market, and you're probably doing right around 7 figures or pushing 7 figures to raise a $5 million, a large seed round such as this. So I would maybe, you know, so when you're asking about the type of enterprise, like what stands out to investors, traction, money in the bank, and customers. I don't know if again, depending on where you are, but I would hope that if you're looking to raise 5 million, that you have some LOI signed by some really large players with a commitment, or that you're already a product that has been in market and that you have some traction already. Or else you might just want to look at, there's nothing wrong with starting at the pre-seed round. I think that that's a great way of making sure you don't raise too much and then burn on a product that no one's necessarily buying, or a pre-vetted product.
Mm-hmm.
You got anything else to add? Is there anything sorry, not to. I'm juggling a bunch of stuff. I came off a little bit, but no. But I mean, like, is like in regards to, um, like, the question about the type of product compared to things like enterprise AI, automation focused tools. What stands out you? Like, yeah, I think this is kind of interesting, and it might touch on investment theses, right? So VCs all have an investment thesis. Are most of those shared outside of who they're trying to raise money from, or are those publicly shared on like the website for easy access, so founders that are looking to raise money can understand what those theses are?
Yeah. Oh yeah, it's publicly shared on each website, and then if you go Crunchbase and who that is, it'll also say what the focus is and what stage. Because I feel like a lot of founders, understandably, when they're raising, they go, okay, I need to meet an investor, and then they'll just send their deck to everywhere. And there's some that only focus on enterprise SaaS, and some that are only focused on SaaS and health tech. And so if you're emailing the wrong one, that's also sending the wrong rapport. But yeah, doing that diligence on who you're going after. And then if you are looking for introductions, then it makes sense to say, hey, can you introduce me to this investor because they're in this area and we're doing this, and I see that they have this gap in the portfolio and blah, blah, blah. Then it becomes, and we have this ARR. Like, oh my God, great. Like, I really can make that introduction, and why specific investor? Because every fund is different and fills, I would argue, a need in the market, just like a startup product. And so finding, between what they're focused on, how they support, and finding that right match will make a huge difference.
Yeah. Oh, Matt, yeah, go for it.
Yeah, no, I was going to say absolutely. I agree. And, Jasper, just to also, if it's helpful, I mean, creating some sort of market map, the competitive landscape, the issue and the conundrum for a lot of founders nowadays, when it comes to raising VC dollars, is you have to convince a VC that OpenAI won't launch this thing over the weekend, or Anthropic or some other large player. And so when you mentioned building an AI product to help students actually learn better, not just automate tasks, but improve real outcomes. When I see students, sometimes I'm automatically thinking education. Education is not necessarily a very VC intense industry, and so there's not always a lot of individuals that invest there. So that's one thing you have to be cognizant of. Not saying it's impossible, but again, from a market perspective, you don't know who invests in the education tech. And then also, I know that OpenAI recently launched like tutor mode on their models, if I'm not mistaken. And so nowadays you can, again, I haven't used the platform just yet, but to me that says that, hey, we're trying to be useful without just giving all the answers away, or as you would say here, maybe automating tasks. So to have a some sort of tutor, mentor, curriculum kind of program maybe built in this $20 a month subscription, that I'm also using across a wide array of applications, that's really going to
Yeah.
be a key competitive component that you're going to have to figure out how to overcome as well.
Yeah. Yeah.
That's awesome insights from the two of you. Absolutely. Let's jump back to Santiago's question that we skipped. How do you pitch or position an AI enhanced product to consumers who are skeptical or anti AI? This is an interesting one.
Yeah. So I love this. So I actually have a blog post around how do you, let me see if I can find it. But the short answer, so there's kind of two to three tiered question. I see a lot of startups say we're AI for whatever. I'm like, well, what does that mean? But if you can pitch me as, hey, you're, to the edtech one, you're a graduate student whose English is not the first language. So my English is not the first language. And, we can guarantee that your, let's say, TOEFL score goes up 20% for $100 or what, again, just like made all this stuff up. Well, yeah, right? My risk is low. I give you $100. My TOEFL score goes up. Yes. Versus, I feel like, again, like that, if you can explain what that value is and why it makes sense, and it just happens to use AI, and you have all the cybersecurity and privacy and all of that, like for a price that your audience is willing to pay for and justifies that makes a big difference. To the comment of edtech, I see this also with social services. I hear pitches on that, and my question is always like, who's going to pay for it, and do they have the money to pay for it? Because I see a lot of the time the products are for teachers. You're like, man, the teacher's already paying so much stuff out of pocket. Like, do they have money to spend on one more app? And the same thing with social services. They're like, okay, we're going to pay, social workers are going to pay us, I think it was like $1,000 a year. I'm like, do you think they have $1,000 a year? So again, like, I hate being that difficult person, but it's like, do you understand your customers and their constraints? I would say, and their interests. And let me find the blog and I'll put it in the chat. And then I don't know if Matt, you want to add anything.
No, not too much to add there. I think you hit it on the head.
Yeah, no, absolutely. I think the most important thing to really just like drive into everyone's mind is to not focus on selling the technology. Don't get hung up on the tech and using that as like, your unique feature that you're selling to people. Do exactly like Irina said, focus on explaining what experience you're providing to very specific people, which is unique and beneficial. And that allows them to understand what the value there is. So it helps. And it also keeps it simple so you can explain that to anyone. And like, Irina and Matthew, you guys touched on earlier, it allows people to identify if they can help or if they know someone else that can help or be interested in, being an investor or being, a customer. And it allows, anyone to direct you and your product or company to the right people. So very good advice.
Yeah, my pleasure.
Cool. I got that. I'll share that in the chats. On LinkedIn, I'll post the links that are over here on the other platforms once I'm able to get into there. So yeah, I apologize from that. Okay, we're over time. You two are amazing, and I appreciate very much that you went over time. So to wrap things up, do you have a nugget of advice that you think is something that founders don't usually hear that would be invaluable for them on their journey to fundraise, grow their company, whatever it may be?
For me, the one thing I want to say is, given the speed in which AI is, impacting innovation, I would say as you're building and you're thinking about that team, I would, encourage founders to engage subject matter experts early and get them alongside as partners. Provide equity, someone in which knows the technology or knows the industry, that can offer some advice and really some unique insight into what some of those challenges are. A lot of times, these individuals, may not be as yeah, the equity or in the advisory capacity may kind of fit within their capacity to provide some support, but really increase that funnel of exposure and information that you can get around people that are working on issues that you're trying to solve or working in a particular market that you're looking to tap into. And so saying, hey, I'd love to offer advisor equity shares, or is this something, and having some of that advice as you're building, I think that should be an integral component, to most founders, because I feel as if with the amount of researchers, data scientists, and quants and engineers on staff at some of the more advanced AI first companies, it's going to be really difficult to do it alone. And so you at least want to have some market signal coming from those that are interested in furthering your cause.
Hmm. I love that. Yeah. I mean, I agree with that so much. I would say my one parting advice is if you're getting venture funding, your goal is two parts. You are trying to reach product market fit, but the other thing you're trying to do for your investors is return the fund. And I think I didn't realize that until very recently, and I actually have a blog post around that as well on, what does that actually mean, to return the fund, and why do you have to do that, and what is this responsibility? So not an easy task, but also wishing you luck. There's many resources. We shared a lot of communities advice. You're not building this alone, and I think I do these office hours maybe quarterly-ish. But yeah, questions are always welcome.
It was beautiful insights and advice from both of you, and yeah, deeply appreciate it. Yeah, Matthew, thanks for being here the first time. I'd love to have you back. Irina, you're
Yeah.
always amazing. Thanks for getting Matthew to come hang out with us. Yeah, I'll be following up with the two of you. Yeah, and thank you everyone for joining in. I really appreciate the questions you've all contributed. Sud, Jasper, Jose, Santiago, and is one more person at the top. Anushka, there you are. Thank you so much for being a part of the community and contributing to not just your own education, but the questions that you ask are contributing to the entire community's growth and ability to learn. So thank you so much for that. And with that, catch you all next time. Have a great rest of the week.